Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Wednesday, December 12th, 2018. I figured this is about as good a time as any for an update. I didn't do one this morning because there was absolutely nothing new to report other than, since last night's market wrap. But now I think it's a good time. Here's what we're looking at. Let's just pick up where we left off. If you haven't caught up on the recent analysis, you can go to rightsideofthechart.com and check that out. There poster there. There's also a couple videos on the YouTube page, or at least one video public yesterday on the market wrap. All right, so here's where we're at. The NQ has hit, my initial near-term target. That was this level here, 68.53. As you can see, I now have us in this wedge type pattern that I'm monitoring. And now my expectation normally, and hey, it may play out, you have a bearish rising wedge, 60-minute chart, although we don't have divergence here on the PPO. You can see the PPO has made a slightly higher high, so I'm going to take away that divergence line, but I did want to point out these other divergences there. Now, what I expect will happen, I think we'll come in, you can see support here, that 67.74-ish level, as well as the uptrend line. So I'm still favoring, open to anything, but let's see what happens. But I think we'll get a thrust back. So far, the price action has been pretty bullish. I've made a case for a potential December rally. And so what I'm watching for now, if we are going to get, if this rally that we've had over the last few days, it will turn in, if it is going to turn into something more, what I'd like to see is a buyer step in here. Again, 63.73-ish support plus a trend line. So reversal there. We're right on the trend line right now. And, by all accounts, this looks pretty bearish. You see the rising wedge. And nothing would be more bullish than to see this pattern foiled, get another thrust up. So I'm favoring that right now. Sometimes I'll take patterns on face value for what they are, and sometimes I'll just dig a little deeper into what I think's going on in the market. So we'll see. So we've had a nice pullback today. I can say this: if you weren't long and wanted to get long, or if you shorted a pullback off resistance here or anything else, I think this is an objective area to either go long, cover shorts. But if you go long, stop not too far below, because if you break that level, you break the wedge, maybe it does play out, and that could certainly take us all the way back down here, and maybe more. We'll see. Maybe this is just another bear market rally with a break of lows to come, but I don't think so. Right now, I'm going off a reversal somewhere around here and another thrust up. If we got it today, if we see some strong buying into the close, that would be very bullish, in my opinion. It will show this sell-off. I think this is profit taking from active traders that jumped in here recently and were able to milk some of these gains. And again, to see this pretty sharp sell-off that we've had intraday, let me show you what I'm talking about. We look at QQQ, and this is why I started the video. You can see a nice dump here. We were up sharply today, about 2% or so. Where were we at? From the highs from yesterday, we were up 2.5, almost 2.4. And you can see we've given up a good deal of that. And now you have a pull back to support here. There's today's earlier reaction low. We're almost there. We're far from a complete gap backfill. I mean, we closed down here yesterday. But I just wanted to show you again why I'm doing this video now. Let's get back to the futures charts. We'll look at QQQ and SPY, and then we'll wrap it up. So that's that. Certainly respect an impulsive break of this line and that 73, 77, 73, 74 level. And let's look at ES real quick, because as I say, I never trade either of those in a vacuum. I like to look at both NQ and ES together and confirm any signals, buy or sell signals on one with what the other is doing. So here's a trend line. I don't know why I didn't have it nice and tight. Let me tighten that up there for you. Okay, that's roughly the fit. So there it is, pull back to trendline support. Bears see what they want to see. They see a bearish rising wedge. They're looking to position short there. And I'm talking near-term stuff. And I still favor, because remember, we hit my NQ target from the last couple of days, but we didn't hit the ES target yet. ES I had up here at 26.96, and so far we've reversed shy. We have almost divergence there on the PPO. We made a slightly higher high, so technically speaking, it's not negative divergence, but we do have negative divergence there on the RSI. So Take it for what you want, trade it as you like. If the wedge breaks, there is also pretty decent support right there, just below at 26.51, and that's why I'm favoring a reversal from either here or down to that level, which is minimal. So I think it's a good time to jump in and add to some positions. Again, if you're active trading, swing trading, we still don't have any solid high probability signals, and I'm talking for a swing trade that can last for more than just a few days. This is an active traders market, so you can call that rapid swing trading, call it what you want. Technically, it's not day trading. I've been long here for a couple days, so those are short-term swing trades. And gaming the rips and dips, as a very active trader, but we don't have any real solid evidence yet for a multi-month or multi-week rally. But if we get what I'm looking for, and again, that would be see the buyers come in and aggressively buy up this pullback, especially today by the close, get anywhere close to, especially if we can take out today's earlier highs, because we had a pretty sharp fade right before I started this video, and actually as I'm doing it. So in fact, I'm going to pause it and I'm going to load up one more contract NQ here. Okay, all right, now let's look at QQQ and SPY, and we'll try to get this video out to you guys. All right, so QQQ 60-minute chart. Let's just focus on the 60-minute charts right now. So what happened today? Well, we got what I was looking for. We took out yesterday's high as well as the 166 level, took it out, and we were up. Remember, we were up almost 2.5%, and that follows. This is the third consecutive day of gains in the Nasdaq 100. So we're certainly getting pretty stretched in the very near term. So if so far I view this as a healthy and needed pullback. I was looking for a correction earlier in the day. And at that point, the QQQ stalled out for pretty much a couple hours there. And so we're finally now getting the correction. I thought that maybe we were going to correct in time, more so in price, but we corrected in time for a little bit and then in price. So 166, it was resistance. Resistance, once broken, becomes support. I don't care that we're 9 cents below it right now as I'm doing the video, because you were coming down pretty sharp heading into that level. And I view that as what I call a momentum fueled overshoot. But if we keep bleeding, we're going to take out that trend line in the support side. Just showed you on the futures. You can see them a little bit better than QQQ, and that's why I led with the futures charts. So there's QQQ, and just to clarify, my next target would be up here to this 168.50-ish level. And at that point, I will most likely take some profits and kind of reassess and look and see where things might be headed from there. So one day at a time. Really, in this market, it's more like 1 hour, 1 minute at a time. And finally, SPY. Here's SPY 60-minute chart. If you recall in the recent videos, I was watching this resistance zone that runs from about 267.24 up to 268.41. We popped it today. Looked like we might have been able to run, but we didn't. They popped it ever so slightly and fell right back below there. You can see, so it's basically a failed attempt to break out and a rejection off the top of that resistance zone so far. 60-minute, the PPO signal line is still bearish. It's still below zero, so that's something to take note. And again, this is why I'm not adding aggressive or official long swing trades on the market yet, despite the fact this is a third day of a rally. But again, there's just too much conflicting evidence and not enough evidence that the correction is over. And so trade it as you like. I do these videos because I think there are opportunities if you're a very active, nimble, short-term trader. And if you're not, as I said, this market will chew you up and spit you out. So, you can continue to watch these videos, and I'll try to make a headline or come out with a description of the video, especially for members of the site, if I see, a nice opportunity for a swing trade. And that'll come on as an official trade idea. So members, of course, you'll get an email immediately as any official trades go out. That'll come into your inbox. All right, so that's SPY. Targets again, still looking for 270.36 on SPY. So things go as planned. And again, that will just show there's at least at this point in time a pretty healthy bid in the market. Like I've been saying, I think the FANG stocks, FAAMG, those top components of QQQ, they seem to be sold out. They continue to outperform a lot of other sectors in the S&P 500, which is loaded down with financials and energy and things that haven't been doing so hot recently. And so there it is. So let's see if we get up here. As and if we get there, I'll share my thoughts. And if we go a whole lot lower, again, I showed you support levels, resistance, or trend lines on the futures. Watch those. You might be able to make one trend line here, but again, I like the futures charts for charting because you have a lot more reaction points. You can draw a better trend line. Right now, I only have on this trend line 1, 2 reactions. I don't even have a third yet to validate that trend line, at least on this SPY 60-minute chart. I talked yesterday about the 15-minute charts using this PPO trend indicator. It would look like it was poised to make a bearish cross, but I told you I'm talking not a bearish crossover between the two lines, but a bearish cross below the 0 line here on the 9 EMA. And it bounced as I suspected, it's keeping this trend right now bullish on SPY as well as QQQ. You can see there the trend remains, at least, again, that's just one trend indicator. It's not a, go everything long when that line crosses and put everything short when it crosses down below. No, it just helps to confirm that this current near-term trend is bullish right now. And if I believe it will continue as I do, I think this is a buying op right here as I'm doing this video, right back down to that 165.72 support level. You can see all the reactions, a gap right there, a gap right there, a reaction high there, reactions back here, and that should take us up. Again, my targets are on the 60-minute chart, but I already covered that. All right, let's wrap it up here. And if anything changes, and it could, this is a fast-moving market, I will do my best to communicate my thoughts ASAP. This has been Randy Finney with Right Side of the Chart. Hope you enjoy.